Welcome to My Game is Money Investing with your host, Mr. G, the retail trader. Welcome to episode 42, where today we're going to be talking about AT&T, most important Q2 earning metrics to watch out for. Of course, I'm not a financial advisor, and these videos are for entertainment purposes only, so let's jump right into it. AT&T is expected to announce its Q2 2023 financial results on July 26, with analysts predicting a 1.1 year-over-year increase in revenue to $29.98 billion and profits of 61 cents per share. Despite a weak Q1, AT&T was on track to meet or exceed its $16 billion free cash flow target for 2023, which could reduce its net debt to around $128 billion and improve its net leverage ratio. The company's fiber operations and connected devices subscriptions have shown significant growth, and the continuance of that trend is very important. Steady growth expected. The first thing that we should touch on would be the headline news items that investors are immediately going to gravitate towards. For the second quarter of the 2023 fiscal year, analysts are currently anticipating that the company will generate revenue of $29.98 billion. If that comes to fruition, it would translate to a year-over-year increase of 1.1 compared to the $29.64 billion the company generated 1 year earlier. There is a reason for the sluggish increase besides the fact that the company is a large operator in a matured industry, and is the fact that the management recently guided towards achieving only around 300,000 net additions to its postpaid phone subscriber base. This was something that our analysts wrote about in prior articles about the company. This guidance provided by management fell far short of the 476,000 net additions that analysts were anticipating. And in response to that development, shares of the company took a beating. On the bottom line, analysts believe that the company would generate profits of 61 cents per share. Adjusted profits should be around 62 cents per share. The earnings per share estimate would translate to a net income for the business of $4.56 billion, with adjusted earnings per share translating to a profit of $4.63 billion. To put this into perspective, in the second quarter of 2022 fiscal year, AT&T generated net profits of about $4.11 billion. So if analysts are correct, we are in store for a nice uptick in overall profitability. There are, of course, other profitability metrics that investors should be paying attention to. These are items that analysts have not provided guidance on. For starters, we have operating cash flow. For context, this metric totaled $9.64 billion during the second quarter of 2022. Though if we adjust for changes in the working capital, it would have come in significantly lower at a $5.60 billion. Meanwhile, EBITDA for the company has come in at $11.28 billion. Cash flow and debt. Outside of these headline items, investors should be paying attention to a stew of other developments. Perhaps the most important thing in the eyes of the investment community would be free cash flow and the expectations that the management has for the rest of 2023. You see, during the first quarter of the year, the company achieved free cash flow of only $1 billion. While this is a nice chunk of change, it would throw into a doubt the company's ability to hit the $16 billion free cash flow that was forecasted for the 2023 fiscal year. In the same announcement that the management had made regarding this net additions to its postpaid phone subscriber base, the firm also stated that it is on track to meet or exceed the $16 billion target of the year. They chalk up a weak first quarter to the fact that the firm had a great deal of spending to contend with, including a $4.3 billion for capital expenditures and other $2.1 billion in vendor financing payments. The latter of these likely will not be replicated moving forward, at least not in the near term. Meeting or exceeding guidance will be incredibly important because it will also play a role in whether the company can get its leverage down considerably. After seeing net debt peak to $170.04 billion during the first quarter of 2022, the company has been working to get that down, successfully reducing to the $131.94 billion at the end of the second quarter of 2022 due to major divestitures. Unfortunately, the number ultimately increased over the ensuing 3 quarters, totaling $134.66 billion most recently. However, if the company achieves its target for free cash flow for the rest of the year, it should be able to get this number down to roughly $128 billion. That would imply a net leverage ratio of 3. Watch the growth areas. This is related to fiber. Even though AT&T is not a growth company by any means, there are parts of the business that have exhibited attractive growth in recent years. One good example would be the fiber operations. As of the end of most recent quarter, the company has 7.49 million fiber subscribers. That is up from 6.28 million the company had at the end of the same quarter 1 year earlier. Monthly average revenue per user also jumped during the same time, climbing from 60.41 to 65.92. The company current goal is to hit at least 30 million residential and business locations for fiber by the end of 2025. This compares to the 22.7 million it had at the end of the most recent quarter. So it is likely we will see the number of subscribers continue to increase during the same time. Along this vein, it will also be interesting to see if the company can still stay on track and take 200 million people mark for the mid-band spectrum that the company plans to roll out by the end of the year. Another part of the company that is often overlooked involves the connected device subscribers that the company has. As the end of the most recent quarter, the company had 112.03 million connected devices subscriptions. That was catering to. This was up from 107.48 million reported only 1 quarter earlier, and it is significantly above the 90.74 million that it had at the end of the first quarter of 2022. It is highly probable that the growth trend will continue, but if we see significant slowing of it, or if we see an absence of growth, that would obviously not bode well for the business. Takeaways. Fundamentally speaking, I believe AT&T is one of the healthiest companies on the market today. I also think it is attractively underpriced, and that the business offers tremendous upside potential. That picture could definitely change based on new data that comes to light. But in all likelihood, I believe that the upside is much more probable. Due to my overall assessment of the company, I have no problem in rating this a strong buy at this time. So listen, I hope you enjoyed the video. Please hit the like, subscribe, bell notification, and leave a comment. And of course, I'll see you on the next video. Thanks for joining. See you later.